G'day guys, welcome back to the Devon Too Good Investing channel. Today in this video we're going to be looking at the Tattooed Chef fourth quarter and full year 2021 financial results. So let's not waste any time, let's get right into it. So for the fourth quarter, revenue rose 32.2% to $52.3 million. More importantly though, the Tattooed Chef brand product revenue increased 21.7% and is 56% of the total revenue. So this year, I think a lot of people are going to be disappointed in this number. I'm a little bit disappointed in this number. However, on the conference call, the management did suggest that branded revenue is choppy and it is not consistent due to variations in promotional activities due to just less promotional activities in club stores. And club stores are pretty much stores such as Costco, Sam's Club. They had a net loss of $13.1 million and an adjusted EBITDA loss of $11.4 million. For the full year, revenue rose 43.7% to $213.4 million. The Tattooed Chef branded products revenue increased 56.7%. And it makes up 63% of the total revenue. They incurred a net loss of $87.4 million and an adjusted EBITDA loss of $26.1 million. So essentially, you might be worried about that revenue growth. Maybe not so much for the full year. Full year was strong, but particularly for the fourth quarter, I think it's just worth reiterating that branded revenue is choppy due to varying levels of promotional activity in club stores. Also, products haven't rolled out yet, so they pretty much acquired a bunch of new stores and retailers in the back half of the year, like Q3, Q4. And even though those deals are in place, the products haven't hit their shelves yet. And a lot of the reshelvings happen around sort of Q1, Q2, for their Q3 and Q4 deals from the previous year. So going out into later this year, we should see a sizable bump in revenue growth just because all those new stores are going to start having Tattooed Chef products out on display. In terms of operational highlights, they ended the year with 78 branded SKUs, up from 38 branded SKUs at the end of 2020, which is massive expansion there. They're expanding into more retailers, approximately 14,000 locations, and this is up from 4,000 locations at the end of 2020. Obviously, they acquired New Mexico food distributors and also Belmont Confections, so this is going to allow them to enter the massive Mexican food market, particularly with those frozen foods. And those particular products have been doing quite well, particularly their sort of burrito bowls and that sort of stuff. Also, there's Belmont Confections that's going to allow them to get into nutritional bars. It's going to help them get into salty snacks as well. And then they're also going to be looking into investments for automation and internal R&D and cold storage. So we'll talk about that soon and how that's going to affect their margins. In terms of their balance sheet, still in a strong position. They've got $92.4 million in cash and cash equivalents, only $700,000 in long-term debt. So essentially there's nothing to worry about their balance sheet at the moment. Yeah, you could argue that the company is losing money, but also on the conference call, this is really big, right? The company should be profitable in 2023, probably the third or fourth quarter of 2023. So that's some exciting stuff. In terms of full year 2022 outlook, they're guiding revenue of 280 to 285 million, a gross margin of 10 to 12%, which is it's fairly weak, but I'm going to explain why I think this can expand in the future, and CapEx of 20 mil, focusing on automation and robotics. So this will also help increase their efficiency, which should also increase their margins over time. So guys, there are 5 key reasons why I do believe that Tattooed Chef will be able to hit those higher gross margins in the future, such as that 25% gross margin or that 30% gross margin. So the first reason is I do believe shipping costs will come down over the coming years. At the moment, they're historically high, and this has been really hurting Tattooed Chef's profitability. It's not just Tattooed Chef. A bunch of companies have been getting hurt by higher shipping costs as well as packaging costs as well. And I do anticipate this coming down. So that's probably the main reason. The second reason is their new cold storage agreement. So they're going to be making a 50% cost saving with their new cold storage agreement. So that's going to help their margins. The third reason is the product shift away from private label to their branded products, as well as the introduction of higher margin ambient and refrigerated products. So pretty much they're going from a place where they were selling a bunch of low margin products, and then over time they're slowly introducing more higher margin products. So that should be a tailwind to their gross margin. Fourth reason is the automation in their facilities. So they will be investing $20 million in CapEx in 2022. This money will be used to automate a lot of their facilities. So this means higher efficiency, it means lower labor cost, and this will increase margins over time. And then the fifth reason is economies of scale. So pretty much expenses as a percentage of their revenue will decrease over time due to just the scale of the company. So yeah, those are my 5 reasons why I believe margins, well, in particular gross margins, will increase for Tattooed Chef over the coming years. So pretty much what to look out for. We're going to look out for branded products revenue growth going into next year. We need to make sure that we don't see too much weakness here. We did have a bit of a disappointing quarter in terms of that, but as I mentioned, branded revenue growth will be choppy just because of their current reliance on the club channel. And also, we should see a bump in revenue going into next year, mainly from the introduction of new products and from the introducing products into the new stores, I should say. So pretty much they've signed a bunch of agreements from last year, but now they should be coming into effect this year. So we should start to see the impacts of those. The management team did warn that growth would be faster in the back end of the year compared to the front end. So just expect that. And look, I'm fairly confident they should be able to hit their guidance. Over time, I do still have conviction in Tattooed Chef hitting that $1 billion in revenue, though we'll have to pay close attention. And if they can get gross margins of, let's be optimistic and say 30%, and then a third of that rolls down to their bottom line, we slap on a 30 PE ratio, which isn't crazy for a company like this. That brings you at a market cap of $3 billion, which is, it's a triple from here. So that's what we get if things play out. We get a triple over the next 5 years. If things don't play out, well, yeah, it might not be a good investment. So we just got to keep an eye on how they progress with revenue and how they progress with gross margins over time. But guys, I hope you enjoyed this one. Make sure you like, make sure you subscribe, and I'll see you in the next one.